Very much indeed. Right, let's find out now then how the wider financial and commodities markets are faring in this ongoing volatility. James Brodie with me as ever. He is of an afternoon, head of the Flux Institute, ex-trader of course. James, oil then rallying hard again today. How are the markets reacting to all that?
Absolutely, all markets are focused on oil. If we bring up the Brent chart, I've narrowed it down here to an hourly chart, so you can see each bar here represents 1 hour. And you can see how we had the huge rally over the weekend. Market eased off after Trump's comments on Monday, but now it's really starting to pick up again. As you say, it's up $5.8 when I stepped in the room here. What's happening now, the bond market's really taking notice now in equities. If we bring up the US 2-year yield, you can see how that's clearly broken out of, if there's a daily chart, the next one, the US 2-year yield has broken out of resistance. It's up 8 basis points today. But really, it shows better if we talk about how much is priced into the OIS. That's what the derivatives market's expecting the central banks to do. Exactly 1 month ago, 13th of February, the US market was expecting 63 basis points of cuts by the Fed this year. That's between 2 and 3 cuts. Now it's down to 22 basis points, so less than 1 cut.
Wow.
If we look at the UK, 2 weeks ago, pricing 2 cuts. Today it's pricing 17 basis points of hikes, so almost 1 hike.
Well, this is what all nations are worried about now, the inflationary pressures, coming upon them because of Trump's war. Absolutely.
It's the worst case scenario then, because then it's a growth shock as well. So when central banks should be easing, they're actually being forced to hike because of inflation. So from a central banker's perspective, it's the worst possible situation.
What if it, we're all praying, aren't we? What if negotiations get underway, though, say in the next month? That would ease things, wouldn't it? Except, of course, so much energy infrastructure is like literally offline now, isn't it?
Yeah, the financial markets would immediately snap back, take that as good news. But then reality sets in, as you say, so much infrastructure is offline. And if you look at yesterday's SPR release of 400 barrels, well, firstly, that barely covers what's already been held back up till now, but also that's 2 million barrels a day being released, whereas we're losing at least well over 10 million barrels per day. So there's going to be a shortage going for many months. And if you look at the OPEC, the oil price 1973, that was over 6 weeks, but then oil price inflation spiked for 6 months. So we would definitely have a long-term inflationary impact.
Right, let's look at the equity markets as well then.
If you look at the S&P now, that's starting to break down. We've talked about key support at just below 6,800. If we bring up that chart, again, that's a daily chart, but you can see today it's breaking down far more aggressively. The market's waking up. Again, just mentioned 6 weeks. When we had COVID, it took 6 weeks for the markets to realise how big a pandemic that was before equities really started to sell off. Now the equity market's finally realising, the bond market is much more dynamic. It's 3 times bigger, but it's much more professional investors in the bond market. There's much more retail investors in equities, and that's why it's slow to catch up.
And no doubt you've been looking at things like gold, silver as well. We've spoken so much, haven't we, in recent weeks and months about them being increasingly safe havens. Still the case now?
Not so much, really, because hedge funds have really de-risked, so they're out the market. The one market that has really consistently trended over the last week is the dollar. So if you bring up the dollar index, I mentioned this yesterday, but that's up another 0.4%. Again, currencies are less volatile than commodities, but if we bring up that chart, you can see that here, this is our 30-minute chart. So each bar here represents 30 minutes, but this is going back to late January, and you can see it's a steady uptrend. Euro dollars had been going sideways for 9 months, although we kept reading about the end of the dollar. Now it's euros breaking down, dollars strengthening. So this is really the dollar's a big winner out of this.
All right, we will talk again tomorrow. James Brodie for now. Thank you.
Thank you, Lisa.